Wow, the stock market is looking absolutely crazy. It's skyrocketing. This is now the opportunity where so many of you who have sold your businesses, who have exited, who have made quite a lot of money from your entrepreneurial journey. This is a time where we should be investing, not in the S&P 500, but into individual stocks because the market's going to boom. The market's going to blow. And everyone keeps saying there's a bubble, but I just don't understand where the underlying thesis is that we're in a bubble. I don't even think we've even started the bull market. So today's video is mainly going to be about the emotional side of investing. I do have a community of very successful entrepreneurs. There's a private community where you have to be doing at least 500k ARR or have raised $1 million pounds. This is a very tight knit community of only entrepreneurs. It is extremely hard to get into, but one of the perks is we have conversations like this about investing from people who have successfully sold their businesses, or from people who have made a cash cow business, or people who have made a lifestyle business and they're paying themselves over $250,000 per year. Click the link in the description and you can apply for the Wellington community. I digress. One of the fundamental principles in life or investing is things don't happen in isolation, uniquely. So when you see stuff like the tech bubble, quote unquote, or the 2008 financial crisis, there are always ramifications in other parts of the world. People are either engaging in optimism, not pessimism, greed, not fear, credulism, not skepticism, risk tolerance, not risk aversion. As mentioned in my previous video, which you can always watch, a great man called Warren Buffett said, when no one is afraid, unwise deals can be made easily. Most of the time, people who buy during them period, it always ends badly. Because you buy with emotions. You don't buy with a clear mindset. You buy with impulse. A majority of the time, this isn't the best way to buy stocks or the best way to enter a cycle. The only hard thing about life is it's very hard to double click into the macro environment and know exactly what stage of life or stage of the economic cycle we're in. But this is why we have great people like Ray Dalio, Jamie Dimon, and Howard Marks. Or you're in a community like Wellington with successful people who have been through these financial cycles and can educate and nurture you into what to do next. These topics cannot be done by yourself. As entrepreneurs, when we sell our business or when we make quite a large amount of money, we want to keep our money, wealth preservation. But you investing into the wrong stock, into the wrong ETF based on speculation that all these legacy media are showing you because a Wall Street expert is saying so. It's so important to surround yourself with people who are in the same boat as you, people who are playing the same game as you. You don't want to do something that maybe a professional footballer is doing, because you're not a professional footballer, you're an entrepreneur. You're more likely to benefit if you're copying the method of someone who's trying to sustain a business, a multi-billion business, or a hundred of million valuation company. Do you get what I mean? This is why you have to observe everything without emotion. Don't let your emotion take in. I know it's easier said than done. Trust me. There's so many different cycles that I've been in, and even though I may not be as old as some of you guys, but there are a lot of nuggets in what I'm saying. You need to invest without emotion. Investing is so important for wealth generation, wealth preservation. And us entrepreneurs who are trying to make generational wealth, we need to be in full control of our emotions when we're investing. Not every day you should be checking your stocks or the stock market because that could affect your emotion. You may do something out of impulse, which we do not want to do because one mistake can really change the trajectory of your business. One mistake can change the trajectory of your finance. All the years of you working in your company and then you end up selling it and now you have a lump sum of money and then you just squander it by one impulsive decision. It's very, very important, guys. We cannot, I said we because I'm part of you guys. We cannot make this mistake. We can't be one of them people who were privileged enough to sell our company and then we just messed up by taking our money out at the wrong time, listening to sentiments, not understanding the fundamental the companies were investing in, or most importantly, making rational decisions based on emotions. We cannot do that. We just can't. We can't afford to lose this money. We can't. Sometimes we cannot succumb to human nature. What's human nature, you may ask? Your emotions. It is human nature to be emotional about most decisions. This is how we were created. But sometimes you have to numb it down to make the best financial decision. There's a great quote by a retired trader that said, when the time comes for you to buy, you just won't. I remember this, let me give you an example. I think it was last week, a couple of days ago, Trump and China were still trying to flesh out this deal between the rare earth and between tariffs. S&P went down, I believe, by 1 point something percent. A lot of successful people that I know were panicking. And I was just like, it doesn't make sense. Why is all my stocks going down when there's no fundamental difference between 24 hours ago and now? Even though the market is down, there's no fundamental issues with my businesses. So what do? I double down. A week later, S&P's at all-time high, gold's at all-time high, Bitcoin's at all-time high. I'm not saying that was because I'm the best investor, which I'm definitely not. However, when the time to buy, most people won't buy it. Or most people are like, in hindsight, if only I knew, I would have doubled down. But it's a bit too late. If the mainstream media are always doing scaremongering, you should be cautious and be like, why is everyone talking about this? Why is everyone scared? Are some of the institutional traders making more money now because of sentiment? You need to remember, if you're losing money in the market, someone else is making money. If you're making money in the market, someone else is losing money. Always remember that. The greatest time to buy is probably the moment of lowest consensus. When majority of people are scared to buy, it's probably the best time to buy. And when majority of people are scared to sell, it's probably the time to sell. You always have to do the opposite. Warren Buffett has been teaching this for decades. Decades. But it's so hard because of our human emotion. We never take full control of our emotions. And the causes to this are bad news, exogenous, declining stock prices, widespread losses, and several articles about how terrible the future is. They're the main thing. And this is why majority of people don't want to buy the low. Because who would buy in the right mind and buy them points? No one would. Only the people who have control of their emotions and understand the fundamental of their companies. They understand it. The main point is it's not easy, but just like running a business, you who are watching this video, or you who are in Wellington, you understand it's not easy to make a business succeed, but you can do it. And you have to be optimistic while other people aren't optimistic. You have to be crazily convinced that you're going to be successful. It's not a normal emotion. But long story short, you need to double down when other people aren't. I'm not saying you do it in a stupid way. It's all about calculated risk. Calculate your risk. And then the upsides are enormous. Anyways, YouTube algorithm is extremely good at suggesting videos. Whatever video they suggest here, I recommend you to click.